difference in the world, it means you have to be different from the world you see. Free yourself from burdens that you know exist. Don't carry the curse of the fatalist. If you wanna make a difference in the world, it means you have to be different from the world you see. Free yourself from burdens that you know exist. Don't carry the curse of the fatalist. If you wanna make a difference in the world, it means you have to be different from the world you see. No victim mindset, raise your standard. Your true self calls and you must answer. Lift the weight of the false self pushing you. Lift yourself up from malevolence. Lift the curse of the fatalist haunting you.
How are you doing? I've got something for you. I was looking at the portfolio of this man right here. This man right here. Michael Burry is one of the investors that I always try to follow. When you got somebody like Burry who is doing nothing but reading, research, and stock picking for a profession, when he picks a stock, he has his reasons. You don't have to do all the work yourself, especially when you're not a professional. I'm not a professional as well. I don't do all the work myself. Very often I look what professionals pick. One of my strategies is to follow some investors, especially Michael Burry, who I respect very much, what companies he's picking for his portfolio, because sometimes it's small stocks or small cap stocks under $1 billion. And those are very nice if you're going for bigger swings, right? So you can buy the stock itself, but sometimes I am very tempted to also buy options. I don't usually buy options only when I'm more than sure that my analysis is right. When I find options that are very far out in the future, 20 months, 18 months, that's a time horizon I would say I'm comfortable with, because I'm tempted to buy leaps here and there. But only if I'm very, very sure that I found something that is a safe bet. And I want to show you what I found. Before we go into the depth of this company or this stock, when I'm investing into a company, I'm in it to make money, not to make the world a better place. That's not in my soul power. I'm into investing to make money. So whatever you think of the company, whatever you think about their activities, I don't want to start any political discussion or moral discussion in the comments. Of course, you may want to type your opinion, but I will just not respond to it. Here we go. When I was looking at Michael Burry's portfolio, I figured out that he was investing into REITs, right? I was checking out some of his investments here, and I came across these two hidden gems, CoreCivic and the GEO Group. So what they both do, they are in the incarceration business. Incarceration sucks when you're not a native speaker. Incarceration business. So they provide incarceration services to the US government. They work together with the Bureau of Prisons, with the US Marshal Service, with the ICE. They run facilities, they manage those facilities, provide services. Market cap is 750 million. When you look at the stock, you see that the stock price has been as high as $34 in 2017, and it went all the way down to $6. Why did this happen? Well, because the Biden administration signed a paper in January, I guess, and he said that the government should not extend existing contracts with private companies providing incarceration services. So therefore, many investors see their revenue streams in danger and their dividend is in trouble. And since REITs are required to pay out 90% of their income, many investors held this stock because of its high dividend yield. The company recently suspended the dividend, so many investors sold. If we look at the valuation ranks, it's just amazing. Price to FFO flow from operations, basically comparable to adjusted income. It's 2.5. The price to book ratio is 0.82. This just caught my attention, and I dug a little deeper, and what I came across is, with a little further research, 3 Seeking Alpha articles. Hugh Exton Investments. It's a very detailed article, and he has a approach that I think makes sense, because he's trying to evaluate the stock by the replacement costs of the facilities. So when you're in the real estate and you see your business is declining from that real estate that you are running, managing, and the services you're providing, you might want to reset your mind into what assets do they have? Are these valuable assets? And since the stock price is down drastically and it's under book value, this might be a reasonable approach. And what he did, he said, if you look at the facilities that the government has constructed for themselves, what did they cost? if the government has such a facility constructed for themselves, how much are they paying effectively for one bed? He comes up with different numbers that are exceeding the prices of what one bed would be worth if you bought the GEO Group right now. So if you buy the GEO Group for the market cap of 750 million and divide it by the number of beds they have, then you come up with a price per bed that is significantly lower than what the government pays for a new facility at the current prices or at the prices in the past years. So he says, just looking at the price per bed, because those facilities will be needed, and he comes up with a intrinsic value of $14 to $15 per share. You can work through it. Hugh Acton Investments on Seeking Alpha, very nice article, very detailed, and the approach to me sounds very, very logical. The other article is Dooyeon Kwak, a South Korean CFA, and he has also done a discounted cash flow approach valuation with the stock, and he comes up with $15 for the stock. So this is something pretty similar, different approach. So you got the asset valued from Hugh Axton at around $15 and discounted cash flow, taking also into account setbacks in the future from the Biden paper that has been put into action. He still comes up with $15 a share. So this represents an upside of what? $6, $12, of 150%. So we have a margin of safety of over 50%. So we want to look at the balance sheet. We got total current assets of $711 million. We have total current liabilities of $411. So this means we have a positive working capital of $300 million. What we also have is property, plant, and equipment of about $3 billion, or if you take into account the depreciation, $2.2 billion. If we compare it with the long-term liabilities, it's basically congruent. It's 3.1 billion long-term debt compared to 3.7 billion long-term assets. So this is something that you want to see, because when you have long-term debt, you want to use that to finance long-term assets. In this case, the real question is, what are the assets worth? So that leaves us with a positive stockholders' equity, almost 1 billion. If we can see some hidden reserves in the long-term assets, meaning the facilities, then this one goes right into the stockholders' equity, meaning huge potential increase for the share price. The real estate, what do they have? So you can look at the GEO Group's map, and that's their US facilities that they are running. I checked out a few, and that's what they look like. Here, close to an airport. When you look at the picture, I think some things come to your mind. What does it look like? From above, to me, it looks like some sort of warehouse, supermarket, logistics center. Of course, it's prisons. But my idea is, even if they run out of business and the contracts are not being extended, first of all, that does not mean they are canceled and the business is gone, right? They still have a certain time when they're running, they're just not getting extended, but this still might take a couple of years. And when you look at the buildings here, I can imagine easily that some developer, some real estate project developer might buy those facilities and just transform it into something else, like warehouse, logistics center, something else. Maybe FEMA is buying it, right? Just as some centers for major emergencies. Or the government buys it. Maybe they just buy it and run them themselves. So there are many options. And just look at the real estate. It's huge. Those are huge land packages. They are already prepared. Buildings on it, infrastructure in place. Those buildings are working. They have air conditioning. They have water supplies. They have everything just to function. And so when you just, I don't know, maybe you make it 2 stories higher, take out all the walls inside and the cores and make it just some huge warehouse and logistics center, I can easily imagine here to be 35 truck terminals or whatever. So those buildings will be of use. I'm not an expert on real estate. I'm not in the construction business, and definitely not an expert in transforming prisons into community centers or something. But I think that when we look at some other factors, I think I'm going into the right direction. And some other things happen on a political spectrum. Here we have a headline: Biden details $2 trillion plan to rebuild infrastructure and reshape the economy. What's happening is, for the future, there are a lot of commodities needed that are going into the infrastructure program. So with money going into the infrastructure program, people buying houses, people building houses, also the emerging markets like China, they consume a lot of raw materials and commodities just to keep their infrastructure going. So what this means is that the commodity prices are simply going up. They are at record high. Iron prices. I was holding Cleveland Cliffs shares at the end of 2019. The iron ore price at that point was around about 75 to 80. Iron ore price now is $200. If you look at lumber prices, that's exponential growth because there's a shortage here. Also, what do you need to buy prisons? You don't make them out of just lumber and steel. You need cement, you need concrete. Global cement shortages are arising. This is because infrastructure, housing, construction, consumption for raw materials is just super, super high. And if we look at the stocks like SunCoke Energy, they're just going up. If we look at stocks like Cleveland Cliffs, just going up. Let's see how much I missed out. There we go. Yeah, I remember $7 and now it's 21. So I could have tripled my money here. But unfortunately, I sold and there we go. Cemex, boom, going up. Why? Shortage. Heidelberg Cement, German company, went from 32 euros to 75 at the moment. What does that tell us about the assets of the GEO Group? Well, those are huge buildings, huge land packages. And if you want to rebuild them today, those suckers are expensive. When we look at those facilities, in January 2004, it opened in May 2005, opened in 2004, February 2014, 1986, 2010. That's amazing. Just over the past 10 or 11 years, real estate prices have increased dramatically. So what my assumption is, and I think that's also Burry's assumption, that the company is sitting on a huge treasure chest consisting of a lot of special real estate. Just sounds weird when you say real estate and think about prisons. I don't know. Look at this video. Warren Buffett issues dire 2021 inflation warning. Basically, in this video, they are just talking about real estate and how the prices developed, what they are experiencing with Berkshire Hathaway real estate. They own, I think, 5 housing firms, 5 housing construction firms. Berkshire Hathaway Real Estate is just focused on housing, and they say, well, prices are increasing everywhere. The raw materials, the workforce, and they just add the increase on their sales price, and people just buy it. People accept it. I guess they have to accept it because they get it financed. And so there you go. You got a lot of momentum on the prices, and they increase. What I want to say is we have many, many, many favorable conditions when we are looking at underpriced real estate or at underpriced companies that have a lot of money tied up in real estate. So whatever they bought for 3 billion in the past, over the past 10 or 25 years, and have financed it long term, this might be a huge setup for a big run up. So what has been worth 3 billion might now be worth 5 billion. And what we saw on the balance sheet, stockholders' equity, 900 million, currently priced at 750 million market cap, remember? What happens if it turns out that the real estate is actually worth 1 billion more? It's not hard to imagine that the price will increase rapidly. It's just a 2-bagger, 2.5 bagger. That's what I'm assuming. So if I take the approach of the guys who wrote the Seeking Alpha articles, we end up with a stock price of 15. You can currently buy $15 for $6. Does that make sense? You don't have to be a genius, even if you are so damn wrong. If if the analysis is so damn wrong? And even if the real intrinsic value is just $9, it's still 50% up. And this might happen over a couple of weeks. Or you just need to have an activist investor who buys the company out. Just some activist investor doing some shit with the company, selling everything, buying it cheap, selling it expensive. You know how it works. I don't think that this specific scenario might happen, but I'm very sure that the management is seeing the intrinsic value. You can also read the earnings transcript. So they came up with some strategies and they said, well, we know that some people think our numbers look bad. So they get advice from financial advisors. They said, shit hits the fan, we just sell some assets, do some refinancing and so on and so on. And when you unlock hidden reserves, financing is not a problem anymore. That's all that has to happen. Stock price is going up pre-market. That's nice. So another 4% pre-market yesterday. The stock just went up 5% over 2 days. I jumped at the stock at 580 yesterday. Bought a ton of leaps. Okay, earnings transcript, you can read it here. What's also important is that they are working on changing the structure from a REIT to a C Corp, meaning that they might lose. I'm not an expert on REITs and some tax advantages, but I think they trade in the tax advantages for a more sustainable financial structure, right? Because a REIT has to pay out 90% of all the income, and a C Corp, I think, doesn't. So they can collect money, they can suspend dividends, and they don't have those huge payouts. So they can accumulate money for a rainy day fund, improve their balance sheet, and so on and so on. So their ratings improve. What they can also do, and this is something that, another example from the past, I owned Tupperware. Tupperware was priced at the lowest point, I think, at 190. I owned the share at 4. And if COVID hasn't happened, I would have stayed in the stock because I thought, well, once you cannot meet, you won't have Tupperware parties. But shit went digital. All the people were cocooning at home, were replacing their old Tupperware for new Tupperware. So the brand value was still there. Tupperware had an excellent few quarters during 2020. They bought back their own debt for pennies on the dollar. GEO Group has an outstanding bond with 6% nominal interest rate, trading at 66% nominal value. So there's a huge discount. So what I would do if it was my company and I can buy back my own debt because it's on the financial markets, I would sell 1 or 2 or 3 facilities, just buy back my own debt. Buy back $1 of debt for 66 cents. And that's what Tupperware did. And look where the stock price went. Just turned around the business, improved the balance sheet massively, and they are trading at, I don't know, 25, 30 something. And here's the Big Mac. If we look at the statistics, and this is just freaking awesome. Remember what happened to GME, right? Massive short squeeze, the most shorted stock of all time. But let's look at the GEO Group. Short interest, 50% of the float. We're at 115 million shares outstanding. We got 50% of that shorted. So there's a lot of short sellers in this stock. And if we do the math right here, so we got 900 million of stockholders' equity divided by 120 shares outstanding. This is 7.5. So we are under book value. And now let's say we have hidden reserves of 1 billion. So we have 1.9 billion in shareholders' equity. I don't know what the tax rate is, but let's say got a 30% tax rate or 20% tax rate, whatever. If you unlock it, now divide it by 120, you get 12.5 bucks per share. I don't know. At the current price, you can price in a lot of stupidity. My analysis might be totally wrong, but that's why you want to have a margin of safety, right? If you make an analysis, but you're just plain stupid, there's a lot of room for your errors and stupidity. And so there we go. I guess margin of safety is enough for me. And I see a huge upside. That's what I see. To sum it up, huge short interest, undervalued real estate, commercial, special real estate. Stock is underpriced, at least 100% upside from my point of view, 150% upside from other people's point of view that are a lot more into the company that I am. And another thing is Michael Burry, well, he's a smart guy and he was posting on Twitter a lot about inflation and so on. He's been anticipating inflation for months. He still bought into the stock. I think for him, it hasn't changed that the Biden program says that they don't extend the service contracts. I think he was after the real estate. And when he bought in at 950, so he's down massively. And we will see on his 10Q for the first quarter 2021, if he reduced, then this would be a signal for me, well, my analysis is pretty wrong, or if he increased, or if he's just waiting it out. But I think if he's in for the assets, and I assume he is because he's also invested in CoreCivic, I have not, because I really like to jump at the GEO Group because of the high short interest. So this might accelerate the revaluation of the stock to its fair intrinsic value. But if you look at the balance sheet of CoreCivic, they are basically the same story. So I wouldn't mind owning either one of those because I see a huge chance in both of the stocks. But CoreCivic has changed their REIT structure to a C Corp already, and GEO Group is doing that, or pretty sure they will do it, and that is a huge catalyst long term. So it's already priced in here, it's not priced in there, and the huge amount of short interest is just amazing to me, and I'm going for a GME 2.0. Because we've seen what happened, and if the message gets out there and people see the high short interest and see the opportunity that this is a totally mispriced asset play, we might also see a little short squeeze here. At least this is one of the possibilities. I don't know how big the probability is, but it's definitely not zero. And we've seen what happened. I mean, you have to be quick and you have to go for the jugular on those kinds of things, because once this shit hits Wall Street bets and so on, like, everybody will be jumping at it. Okay, so that's what I have to say right before my 4-day weekend. I'm gonna get out of here. I'm gonna grab a cold beer. You can go on Reddit. You can follow me there. You can comment down below. You can go on StockTwits. Somewhere I posted a photo of my current options portfolio on the stock. I bought more than I actually wanted, but I thought it was like this kind of a YOLO. But I think I'm right here. And if you disagree, just let me know. If I have missed out on something that is so obvious and I don't see it, then just tell me. Feel free to challenge my thoughts, my ideas, and get back to me. I'm always open for a sound discussion. I hope I see you all soon. Take care and see you all next time.